All right, so if you bought a leaps option in the beginning of this year and then you sold a covered call against it to essentially do the poor man's covered call, and that stock continued to rip throughout this year as the market has, there's a pretty good chance that your covered call may be deep in the money and in a lot of trouble. Or maybe you just have a covered call that's deep in the money and you think you're in a lot of trouble. This is the video for you. I have an ugly, ugly poor man's covered call right now. I'm going to show you exactly what it is. But more importantly, I'm going to explain to you why I'm not worried about that situation, how I'm managing it now, and how I plan on managing it in the future. So here's my Robinhood portfolio, and I actually have two poor man's covered calls. I actually have one on the put side with Roblox, so you can see I bought puts and then I sold puts against it. But this video is more going to be this SPY leaps that I have right now with the expiration of 12/17/2027. So pretty much 2 years from now, right? Yeah, it's October 2025. So 2 years from now. With that, that SPY is up $4,000 that position. That's an amazing leaps. And if I had just that leaps, I would probably just close that and open another one. But here lingering, I have a 560 strike short call. So a covered call against it. And as we know, right now, the SPY is well above that 560. Actually, SPY is trading for 572 at the moment. So over $100 more strike than this short call right here. If I open up this short call, we can see that I am down $3,539 on that position. What does that mean? That means that the value of that option, right? We want short calls to go down in price. That means it's gone up in price $3,539. And that just today is $239. I'm not panicking about this. This has an expiration of January 2026. And the reason that I am not panicking, or I think the panic is people worry about what happens if it gets assigned early. This is not going to get assigned early, at least right now and for the foreseeable future. And I think before we go forward and I explain to you what I'm going to do, I need to explain to the people out there why this is not going to be expired early. And to truly understand that, we need to understand the value of this option. So what I'm going to do is I'm going to screenshot this right now because we know the values and the numbers are going to change. I'm going to screenshot this and first explain to you why, even though this is over $100 in the money, right? SPY is trading for 572 and this is a 550 strike. Why I am not worried that this is going to be assigned early. I'm not worried about that at all. Okay, the reason why I'm not really worried about this thing getting assigned early is because of this value right here, and that is the value of the option. And what we need to understand is that the value of an option is not just a random arbitrary number. It is made of two things, and those two things are intrinsic and extrinsic value. Now, the intrinsic value is very easy to find. It is the exact amount between the current share price and the strike price. So I can solve for that number at any time as long as I know those two numbers. So right now, for this value of $12,083, I can find the exact intrinsic value of this option. So when I take the current share price, which is right here, and subtract it from the strike price of 560, I get a difference of $112.78. That's how much this option is in the money. So that means of this $120.83, which we really know is $12,083 total value, I know that $11,278 of this is intrinsic value. Now the extrinsic value, which does not have a definite amount, is just the difference of those two. So that difference right now is $805 worth of extrinsic value. Now, extrinsic value is built on things most commonly IV, right? So whatever the IV of this implied volatility of this option is going to be, that is going to vary extrinsic value. But what we do know is that as we approach expiration, extrinsic value goes to zero, where on expiration, this goes to zero, and the only value left in the option is this intrinsic value. So right now, I am so far away from expiration that this has a pretty high extrinsic value. And as long as that extrinsic value stays high, it does not make sense to exercise this short call from the buyer side. Because when they do so, right, what happens when the buyer goes and exercises an option? Well, they get to buy 100 shares at this price. Now, by doing so right now, yes, they would save themselves $11,278. But when they do that, they will essentially be setting $805 on fire. It would be the best for them if they wanted to, if they had this leaps, right? Because they're the buyer on the other side, they would sell to close for this value here. Now, when they sell to close, that does not affect my option, all right? It's also a misconception that my option that I sold and bought was with one person. No, it's in a pool. So because I know that the buyer does not want to exercise this early and set this $805 on fire, I know that I do not need to worry about early assignment on this short call. Now, when could that possibly happen? Well, as we get closer to expiration, let's say we're a week out of expiration and it's still this deep in the money, but now we have a situation where the extrinsic value is maybe $60. This is seen early assignment with dividend stocks. As you approach an ex-dividend date, if the dividend that the buyer would receive for owning the 100 shares is more than the extrinsic value that they set on fire by exercising it early, that's the only time that you're really going to see this option exercised early to capture a dividend. Now, SPY, with that, we'd have to worry about that maybe, but this is not going to be until we get very, very close to expiration. So that's kind of how I first think about the mindset of why I'm not panicking yet. So that's like right now, why am I not panicking? But now, how am I going to manage that in the days, weeks, and even year to come? Let's go back over to Robinhood and I'll show you exactly what I'm going to do then. So there's really two things that can potentially happen or what I'm thinking about. When I get to about 20 days out, so pretty much right around the new year, that's when I start to think about extrinsic value going to zero and possibly early assignment. Really, before 20 days to expiration, I'm not going to really worry about that at all. So when I get to that point, I am going to roll this short call. I'm going to roll it up and out as much as possible. Now, will I get to break even on this roll? No, I will not get to even on this roll. Maybe I'll get to strike up to 570, 575. And you might be thinking to yourself as well, Brad, isn't the whole idea of the poor man's covered call to sell covered calls and get premium? Yeah, that's the idea of selling calls. But with a poor man's covered call, we also have to think about that leaps option as well. So as this thing continues to grow and I'm not making any money by selling weekly or monthly covered calls, my leaps option is still exploding in value. And if you saw my video on the poor man's covered call, I related this to like having a house and then having the short calls be your rental. Maybe this is a time where you have a vacancy. So right now, yeah, I'm not making any rental income from my short call, but every single day, my long leaps is gaining value. It's made $252 today. And that leaps is going to gain value faster in most cases than the short call is going to lose value. So I'm at plus 252 on the long call today. How much have I lost on the short call today? I've lost 232. So even though I've lost 235 here, I made 252. So the leaps option is still winning for me. I'm still net on the day $20. So as I approach expiration, I'm going to try and roll that. And I'm going to do that for as long as possible. I might have to roll it 2-3 months. We'll see what happens. Now, the next thing you're thinking to yourself, okay, Brad, this still has an expiration in 2 years. What if you have to roll and you start to get to the end of this SPY long leaps and you essentially run out of time to roll? Okay, let's think about that scenario. Here's the kind of the options that I'm thinking. Number one, I can maybe at that point SPY is trading for 700. And at that point, I might take a loss, right, to buy to close the short call and then be able to sell to close the leaps and not make as much money as I want to, but still do well. That's like last case scenario. Best case scenario, what I am going to do is I like to buy leaps options for the SPY every 6 months expiration that pops up. Here's what I mean. So right now, this is for 12/17/2027. If I go into the options chain for SPY, the furthest I can go out right now is I can go out to January 21st, 2028. So that's only 35 days more. So right now I am not going to buy another leaps. But before expiration, before December 17th, 2027, there will be a June or a July 2028. What I will then do is I will buy another leaps option, which will then become the collateral for this short call. It'll buy me 6 more months to roll things out. And then I can sell to close this one and make all of the money on the difference in premium on that option. That whole thing we don't need to worry about if the market pulls back 20%. If the market pulls back 20%, then it will be a lot easier to roll. I'll get a lot closer to the money. I can buy to close this at a lower premium. You're thinking to yourself, well, if the market pulls back 20%, so does your leaps option. Your leaps option is going to get crushed. Yeah, my leaps option is going to get crushed, but I still have time for that to recover. I still have 2 years, and I am going to sell to close that leaps option probably within 1 year to expiration. After I hold this for a year and I get long-term capital gains tax on that long leaps, I am going to probably buy to close. And like I said, I'm going to piggyback another leaps option on top of that. The last thing that might get criticized on that is like, well, you're really, really hoping that over time, the SPY continues to just go up and up and up. That is a pretty good assumption that I'm making, that over a 2-year period, we will have major pullbacks, but over a 2-year period, and I've kind of back tested this on the SPY over 2 years, it is going to go up, especially when I'm buying this leaps option so deep in the money. The strike on my leaps is 545 right now. So would this work with other volatile stocks and things like that? Maybe not. This is an index, okay? So just to recap this video, and please leave any comments down in the comment section if you have any questions. I'm not panicked right now because I'm not making any money selling calls, but my leaps option is going great. I'm not worried about us getting assigned early because the buyer to do so would be setting $800 on fire, and they know it'd be better to sell to close their option than to exercise it early. And if they buy to close, that does not affect my option. How I'm going to maintain this is I'm either going to wait for a big pullback and then do a roll, or I'm going to wait till 20 days out from expiration, till this is in like mid-December, and then I'm going to roll it out as far and as up as possible. And I will do so until I get myself in a much better position. If that much better position approaches 12/17/2027, probably in like October of that month, or whenever I see a June or July 2028 expiration, I'm going to buy a new leaps, which is going to buy me 6 more months, then sell to close this, and everything will be okay. That's the plan. We'll see if it happens. You can tell me that I'm a donkey in the comments if you want, or if that made sense to you. I hope it put you just a little bit more at ease. This SPY project has been going awesome. If you saw my last video, you saw that I was chipping away at all those lessons learned. I will do a recap of exactly what the P&L is on that. I am approaching 1 year of doing these daily SPY puts and calls on my other SPY put and calls video series, things like that. So be sure to check that out as well. I hope you guys are also very profitable and enjoying these markets just thriving at all-time highs. I'll catch you guys on the next video.